This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies, using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. Let's have a quick look at Bitcoin and the overall market and have a think about what traditional markets will be doing as a result of Federal Reserve's monetary policy and the ongoing tackling of inflation, which is basically what's having a dramatic effect across the board for everything. And crypto can't avoid that. As we all know, Bitcoins have been sucked into the system, and that has its pros and cons, but the trade-off being that when traditional markets go down and dollar goes up, Bitcoin's way more affected than it was previously. So let's have a quick look at Bitcoin first of all. So as was it yesterday or the day before when I made my last video, there'll be more frequent videos coming from now on. We've got the school holidays has just finally come to an end. Kids are back at school from next week, so it shouldn't be too much of an issue to be a bit more regular about this. But even so, if there was a time for me to not make videos, it would have been this last few weeks, because I've been in this meandering channel, up down up down up down, effectively accumulating within this larger range from roughly about 32 to all the way up to 52. It's $20,000 range. You might think, well, what the hell? But I mean, that that's the nature of accumulation for a volatile asset like crypto, like Bitcoin, that would be. But we're in this ascending channel, and it does look as though we are now looking to break down. So, as I was saying throughout this trend, is that these ascending channels or rising wedges, or whichever way you want to draw it, they do have a habit of breaking down, right? And so you would favor a breakdown of this formation, generally speaking, and we might be getting that now, and the operative word is might. This is a crooked trend line, all right? The candle bodies generally have respected this, so have the wicks, but also it's a little messy. There was also a 3-day 200 simple moving average, which more or less marked the trend line. What is that called? Which is here, this yellow, and we are below that as well. So whether you go by the 200 simple or you go by the trend line, doesn't matter which way you cut it, we are currently below it. Yet remember, this, if we're going by the 3-day, this candle body hasn't closed yet, and although the daily has gone below the trend line, the 3-daily hasn't, but we are looking to find a rejection on it already from just today of closing below it for the first time with the candle body. So with that said, it does look like it wants to come down. All moving averages are above us, which is no place to be. Rejections have been taking place on all kinds of moving averages, whether it's on the daily or on the weekly. And we can just have a quick look at that. Weekly 21 exponential moving average has been tagged the same with the 50 exponential. And normally what you'd want to see is holding above that 50 exponential at least, because that in previous bull markets has always shown us where good things or bad things take place. And at the moment, that's a rejection from it, quite a clear rejection from it. So the weekly's suggesting further downside, but there is this is going back a little while now, but we're talking about a short signal generated on the itchy cloud on a weekly. We're not like that, we're not getting anywhere close to that, but we would get that if we closed candle bodies on the weekly for about 36,500, and if we see on the daily, we are brewing a signal similar to that for a daily short signal, which would be when this cheeky span closes below the cloud, which at the moment is about 39,300, we'll call it. And again, that's candle body closures, all right, on a daily. So we've not got those short signals, but as far as the formation is concerned, it's technically below it. But with this trend line being what it is, which is effectively a shadow of the 3-daily 200 simple moving average, let's see where the 3-daily closes first, which I believe is today. I can't be certain, but we'll keep an eye on that. So Bitcoin toying now with the very realistic possibility of breaking down, and if it were to break down from here, it would be coupled with a short signal on the daily and potentially on the weekly. So we would be thinking about a significant drop on this one, down towards, I would say, at best 34,000, top of this area where we've had reactions in the past. Maybe the bottom, which is about 32,000, and worst case scenario, we have a much deeper dive down to the upper 20s. Again, all of these areas are technically still within a much greater accumulation range and should be taken advantage of by me, at least. You guys do what you want to do. I've bought this area out obviously a while back now, so I got orders in at 40,600, 35,000. My next order is going to be at 31,000, which is in between this and obviously this. You say, I can hear you muttering, but why not put it on the actual? From what we see here, this is why I don't want to get it exactly on what I believe to be, you know, the lowest lows. It's a zone, isn't it? An accumulation zone. So if we see how we've reacted within this current formation, the buyers have been stepping in higher and higher and higher. Now, if we have a breakdown, obviously these buyers will be like, oh, damn it. But what I'm thinking is that I would rather front run any potential low for what could be a sharp reversal, or just not even getting there. As you can see, the buyers are stepping in, so I want to obviously be a buyer. I'm not going to put an order all the way down at this particular trend line here, about 29,000, because I have a strong feeling that would be front run. Now it may not be, but it could be. So I'm going to front run it to a large extent at 31,000, and that would be a nice little area to pick up some more Bitcoin in what I strongly still feel is an accumulation, even in the context of a breakdown out of this formation. That's what I'll be thinking about, right? And that's where I'll be going with this. So that effectively is your Bitcoin for you. Still the same broken record, but now it does look like we're about to change the behavior. But again, we want to see that 3 daily closure. It is a weekend today, so traditional markets aren't open, so we might even get a little upside on this one, but whatever it does over the weekend is not really the main deal. Excuse me. Now, traditional markets are having a little bit of a pullback on this one at the moment. That's fine. As you can see, the dollar's continuing to march onwards and upwards. It's a strong chart, but moreover, it's not just about the chart for this one. This chart is just a reflection of the monetary policy decided by Federal Reserve, and they hinted a couple of days ago that they're going to go a little harder on the next rate hike, to potentially and most likely, to be honest with you, a 50 basis point in May. So the last time we saw a rate hike, it was a 25 basis points, which was, in my opinion, a bit small. I would have rather them gone 50 at the time, but you know, I'm not in charge. And we had a very good reaction, and this is what we were saying the entire time. It's a sell the rumour, buy the news event, and markets have a habit of pricing in whatever it is that's going to take place. And so when the actual rate hike took place, it was a non-event. It was a bullish thing, and we saw some serious rallying going on. And again, you know, this is, most people might not really think about that, but the markets effectively price everything in advance. We saw this, I mean, you know, again, this is a broken record channel, but there was no inflation here. The inflation was in the post, and we rallied all the way up to the top. Inflation is actually at a new high, but yet assets are coming down because they're tackling inflation, they're dealing with it. So rather than thinking that it would be the opposite, as in like it's inflation at its all-time high now, why isn't assets and everything going up? It's because borrowing is effectively going down, the liquidity is going down, and the Federal Reserve, along with all other national monetary policy makers, they're doing the same thing. So it's a counterintuitive effect, which is why I expect this to continue to go down, and then when the rate hike takes place, we have another rally. Wherever we are at the time of that 50 basis point rally is where we will launch from once again, for potentially just a rally, maybe not a reversal. Now, there is a chance, obviously, that we get reabsorbed back into this channel, you know, over the weekend and into next week, and Bitcoin can continue with this, you know, this march up towards its main area of breakout, which is 52,000. That's where things get particularly interesting, and that's what we also need to think about and keep looking at, which is why I'm not trying to put across, let's not try and get too clever. You've got to try and keep it simple, really. You know, you sell high, you buy low, and then you sell high again. You know, I'm not suggesting sell there, but you know, we wait for the inevitable move back up again. It's all about dollar cost averaging, I suppose, during moments like this. It is a boring market, I have to say. I was doing the live stream and it was one of the comments in, when is it going to stop being so boring? Why is the market so boring? Well, the market's not able to do its own thing, and crypto used to have much better way of trading. It was less coupled with traditional markets. I mean, there was always, you know, comparable charts really, but it wasn't like what it was now, where you basically have to keep your ear to the ground and listen to what monetary policy makers are doing all the time. And then trade with that in mind. It wasn't really like that. You could trade the charts based on, you know, on their own individual merit, but you can't really do that anymore, as we see when we've got the Dixie breaking out and traditional markets going down and Bitcoin going down with it. But regardless of all of that, Bitcoin is slightly different in what it actually refers to. Bitcoin, I don't like saying it, but I suppose it's seen as a store of value, like a commodity, like gold in a way. And so it doesn't have negative earning reports, it doesn't have anything like that, which stocks do. So stocks will continue to go down as people, you know, suffering, you know, from the inflation at the moment, cut back on unnecessary spending, like Netflix, for instance. So it's not subject to those sort of things. So it will trend with the overall market, but it's not going to get, you know, it doesn't have those other things. So to compare it to stocks exactly is kind of unfair. There is a difference in what it is and what it refers to, rather than just thinking stocks down, Bitcoin down. There's a whole reason, a lot of other reasons why stocks will go down, and obviously that would bring down major indices like Nasdaq and S&P and FTSE. All this lot will all go down as a result, but they will also be getting kicked down the stairs because of the nature of inflation and what that does to companies and their earning reports. So, gone off on a little bit of a tangent, but that's Bitcoin. That's your Dixie. Bitcoin dominance. They're still actually, you know, getting rejections here and actually being below the center of this Bollinger Band on the 20 weekly. So that actually makes it look a little bit like altcoins could do okay out of this. The market trending as one quite neatly, and so if Bitcoin pulls back by 20%, bringing it down to the lower 30s, then maybe some of these altcoins will effectively just they will go down further, obviously, than Bitcoin. They usually do, but not a massive amount. Looking at the way that this is postured right now, it seems relatively equal, and so yeah, it will be an interesting event to see what happens if Bitcoin does break down by 20%, and see how altcoins perform. We were all looking for a major rotation on this chart, but for the moment, not quite really seeing it, not really feeling it, to be honest with you. It's kind of meandering and neither here nor there. But the Bitcoin, the total market 3, so this is a market cap excluding Bitcoin and Ethereum, getting quite a harsh rejection on the weekly here from the center of the Bollinger Band as well. So it doesn't look particularly happy or healthy for any of these charts in the short term. That doesn't mean, you know, accumulating, you know, altcoins is a bad idea. It just means that you might be in for a bit of a wait before some serious gains are made. Some of these prices are pretty tempting, I have to say, but as far as short-term trading is concerned, there's no particular direction has been picked yet. So it's difficult to really say, you know, trade this, buy this, short this, long this. It's kind of hard to do that, but there is, in my opinion, quite a large move brewing, whether it's up or down at this very moment in time. Effectively, we are still more or less dancing around the support, which offers large move to the up, but if we break the support, it offers large move to the down. So at this very moment in time, it's I wouldn't say it's 50-50. It does favour a bit more downside than upside, but I personally am not really looking to try and play this one with derivatives or anything like that. I'd be more interested in seeing it break down and buying back lower and lower than to see it sort of break out and remain in what is generally considered to be a bearish formation. So, like I say, in the absence of short signals at the moment, and also there's obviously not going to be any long signals on this one for large moves, we'll just have to sit back and wait and see. That's probably the best thing to do for the most part, really, until a general direction has been established for all markets. But the way that I'm choosing to interpret all of this is through the lens of traditional markets, which is everybody's going to be slightly afraid of this 50 basis point. They'll be selling. There will be mild panic until the moment it actually happens, and then similar to the way it reacted on the last rate hike, we have a rally. Maybe that's the rally that brings it out from the depths. Remember, the lower it goes, the more tempting it is. People want to participate in all these markets. They've got money burning holes in their pockets, not just for crypto, but for everything. The lower it goes, the better it will be. The lower the entry point, the more money you make in return. There's a lot of people out there, investors across all fields, that are desperate to get back in. But as we wait for the 50 basis points, let's just wait for a better entry. And I think that's how the traditional markets are being viewed. That's also how crypto is also being viewed. But don't be alarmed to see it go down any further. It should be viewed as effectively an opportunity to pick up more incrementally in a dollar cost averaging way. Right, I'm going to leave it with you there, but thank you for watching. I hope you have a nice day and take it easy.